Did you know that if you had invested just $1 in Bitcoin back in 2010, today it would be worth over $90 million? That's the power of Bitcoin, the first and most well-known cryptocurrency. Born in 2009, conceived by the mysterious Satoshi Nakamoto, Bitcoin revolutionized the way we perceive currency. It emerged as a response to the financial crisis, offering a new, decentralized form of money free from governmental control. The first Bitcoin transaction took place in 2010, when programmer Laszlo Hanyecz bought 2 pizzas for 10,000 Bitcoins. Fast forward to 2017, Bitcoin hit its peak price, soaring to nearly $20,000, making headlines worldwide. After a period of fluctuation, Bitcoin surged again in 2020, hitting new heights and sparking renewed interest in cryptocurrencies. But the question on everyone's mind is, what's next for Bitcoin? Predicting Bitcoin's next move is no easy task. It's a volatile beast, with prices swinging wildly in a matter of hours. So what makes Bitcoin's value fluctuate so much? It's a concoction of several factors. Let's break them down. First, supply and demand. Bitcoin's supply is finite. Only 21 million Bitcoins will ever exist. This scarcity factor plays a significant role in Bitcoin's price. When demand outstrips supply, prices rise. On the other hand, if supply exceeds demand, prices fall. This was evident in late 2017 when Bitcoin reached nearly $20,000 due to a surge in demand. Next, let's talk about market sentiment. It's a powerful force, one that can propel Bitcoin's price skyward or plunge it into the depths. Fear, uncertainty and doubt, or FUD as it's often called, can trigger a sell-off, sending prices tumbling. Conversely, positive news can send prices soaring. Remember in 2019 when China's President Xi Jinping endorsed blockchain technology? Bitcoin's price shot up by over 40% in just 2 days. Now, onto global economic events. These can sway Bitcoin's price in unexpected ways. For instance, in March 2020, when the COVID-19 pandemic hit, investors flocked to Bitcoin as a digital gold, driving its price up. Lastly, let's dive into the concept of Bitcoin halving. This event, which occurs approximately every 4 years, cuts the reward for mining new Bitcoins in half. It reduces the rate at which new Bitcoins are created, effectively reducing supply. The last halving in May 2020 led to a significant price surge as demand outpaced the slowing supply. In conclusion, Bitcoin's price movements are a complex interplay of various factors. Supply and demand, market sentiment, global economic events, and Bitcoin halving all contribute to the notorious volatility we see. So what do these factors tell us about Bitcoin's future? Well, they suggest that while Bitcoin's path may be rocky, its upward trajectory seems more likely than not. But remember, in the world of Bitcoin, nothing is guaranteed. One of the key drivers of Bitcoin's recent surge has been the increasing interest from institutional investors. You're probably wondering, what does institutional adoption mean? Well, it's a fancy term for when big players like hedge funds, corporations, and even governments start investing in Bitcoin. These aren't your average Joe investors. We're talking about entities with deep pockets and the power to move markets. Let's look at some examples. Just last year we saw Tesla make headlines when it purchased $1.5 billion worth of Bitcoin. Then there's MicroStrategy, a business analytics company that's been steadily acquiring Bitcoin since mid-2020, now holding over 100,000 Bitcoins. And let's not forget about Grayscale Bitcoin Trust, a digital currency investment product that individual investors can buy and sell in their own brokerage accounts. So what's causing this wave of institutional adoption? Well, many believe it's due to Bitcoin's digital gold narrative. With its fixed supply and decentralization, Bitcoin is seen as a hedge against inflation, and a way to preserve wealth over time. But it's not just about wealth preservation. Institutions are also seeing the potential for significant returns. After all, Bitcoin was the best performing asset of the last decade. However, this isn't a one-way street. Institutional adoption also has significant implications for Bitcoin and the wider crypto market. It brings in new capital, increases liquidity, and contributes to price stability. Plus, it adds a layer of legitimacy and trust to Bitcoin, which can help attract even more investors. But remember, Bitcoin is still a highly volatile asset. While institutional adoption can reduce price swings, it doesn't eliminate them. So, as always, it's important to do your own research and understand the risks before investing. Yet, institutional adoption is just one part of the puzzle. Regulation is a double-edged sword for Bitcoin. On one hand, clear rules can pave the way for greater institutional adoption, boosting Bitcoin's price. On the other hand, Restrictive regulations or outright bans can have a chilling effect, driving prices down. Take the recent news from the US, where the Securities and Exchange Commission is considering clearer guidelines for crypto assets. This could potentially open the door for more institutional investors, which would likely give Bitcoin a significant boost. Meanwhile, in China, authorities have recently tightened their crackdown on cryptocurrencies, leading to a significant drop in Bitcoin's price. And then there's the European Union. Their proposed markets in crypto assets regulation, or MiCA, could both help and hinder Bitcoin. It may bring more clarity and security for investors, but the stringent requirements could also limit some of the freedoms that make Bitcoin appealing. So we see that the impact of regulation on Bitcoin's price can vary greatly, depending on the nature of the regulation and where it's coming from. Regulation, like it or not, will play a crucial role in Bitcoin's future. So where does all this leave us? What's the next move for Bitcoin? Well, let's take a quick tour of what we've unpacked today. We've seen how Bitcoin's price is influenced by a myriad of factors, including macroeconomic indicators like inflation rates, unemployment figures, and global economic events. We've explored how institutional adoption, with big players like Tesla and Square buying up Bitcoin, is driving demand and influencing its price trajectory. We've also touched on the regulatory developments. Yes, while some see regulation as a potential threat, it can also bring about stability, and let's not forget legitimacy in the crypto market. So, what's next for Bitcoin? Based on these factors, it's safe to say that Bitcoin's journey is far from over. We might see some volatility, sure, but the trend towards wider acceptance and integration into the financial ecosystem seems to be the way forward. Remember though, predicting Bitcoin's future is more art than science. Always do your own research and never invest more than you can afford to lose.